Welcome. My name is Van Richards. I'm a chartered financial consultant, and today we are talking about one of the world's largest semiconductor manufacturers, Taiwan Semiconductor. So let's go ahead and begin with the daily stock analysis. Thank you for joining me. And if this is your first time, go over and hit that like button, go over and hit the subscribe button because you're going to get great content on a regular basis. We come to you almost every day. Some days we don't make it. Yesterday, we got a little bit behind, so we're here today to make up for it with a great bit of information on Taiwan Semiconductor. And before we begin into that, there's one thing that I do want to talk about as we talk about this. And I'm reminded of a quote that is by Pablo Picasso. And this is it. Our goals can only be reached through the vehicle of a plan. And if you're frustrated with your finances and the direction that you're going, I can help you. Go over to richardsfinancialplanning.com and learn more about the prosperous planning process. Okay, so let's go ahead and begin talking about today's stock, Taiwan Semiconductor. Now, in the past, I've talked about stocks in the perspective of a hare and a tortoise. You know, the Aesop's fable concept that the hare, the rabbit, is the one that moves faster and forward, and then the tortoise is slow but sure. Well, let me tell you what, folks. Today is a huge hare, and I mean that pun intended. It's a huge stock that's a hare. Remember, the investing strategy in itself starts off with the concept of the tortoise, which tortoise stocks have strong balance sheets. But then when we go and we look at those that are the hare stocks, so there's the ones that have potential higher return. They do have greater risk, but they do have more potential return. And that's really what we're looking at when we're looking at Taiwan Semiconductor today. But remember, no matter what stock that we're looking at, we have to keep in mind that the past performance of stocks is not going to guarantee what their future results are going to be. Now, let's take a look, though, and see actually more detail about what Taiwan Semiconductor does. So let's go through this, because Taiwan Semiconductor itself is the world's largest manufacturer of semiconductors. At $12.14 billion in their last quarter, the net margin was down slightly, but their platform really is built on the concept of making chips for smartphones and high-performance computers. They're involved in a couple of other different areas, such as automotive and the Internet of Things, but their primary platforms for production are going to be smartphones and high-performance computers. They ended the day up a little bit at $105.20, which the value of the company, you know, fluctuates every day. It's at $543 billion with a B. That's a bunch of money. Okay, now remember, every day that I come to you when I'm talking about stocks, I talk about three different things with stocks. One is we analyze the stability of a stock. This is how we're going to tell you it's a good stock or not, where it's a good stock for your future and to help you determine if it's going to fit in. It has to have stability. Number two is it has to have good earnings. We're going to talk about that. And then third, not last or least, but third, the competitiveness. How did they compete with other stocks that are similar? Now, we have talked about this in past days. If this is your first day to visit, welcome. Of course, go over and hit the subscribe button. But the way that we look at the stability of a stock is by analyzing the economic moat. The economic moat is a concept that was brought forward really and popularized by Warren Buffett. And the idea is there's 4 or 5 significant characteristics that stand in between a company and its competitors. Now, there are 2 really big moat characteristics that Taiwan Semiconductor has. I don't want to emphasize those because that's really going to tell you what the possible future is or how solid the possible future is for Taiwan Semiconductor. The first thing that is a big moat characteristic is the fact that they have a cost advantage. The size of the company and the fact that there's really only one other company out there that's even close to them, and that's Samsung. as far as producing chips goes. There's other companies too, but they're really the Chinese manufacturers, and there's a couple of other worldwide manufacturers. They're really about 10 years behind. So the cost advantage is big. They have lower cost on each chip. Now, this next characteristic is really, really big. It's the intangible assets. They have proprietary knowledge, which is really important. It helps them to build chips which are faster and smaller, really. I wanted to say bigger, but that wouldn't actually be accurate. A long, long time ago, this dates me as far as age goes, but in the 1970s, I studied computer programming, and I learned BASIC, Fortran, and COBOL. And the computer was huge. It was the size of a 4-story building. It's gone down in size, and that's why Taiwan Semiconductor has such an advantage, because they've shrunk down everything. They've actually obliterated Moore's Law. Moore's Law basically says that the size of a semiconductor, the capacity of it, the size of it is going to shrink every 2 years, or it's going to be, I believe, cut in half. But if we look at the chart that's in front of you, it goes back to 1970s, and it shows you that at that point in time, the technology nodes, now the technology nodes, for those of you that are not familiar with it, the technology nodes are the pathways in between the circuits. Back in the 70s, the pathways were huge. Drive a truck through it. That's why the computers were so large. The average node size was 10,000 nanometers. But if you look at the chart as it's gone down into the 2020s, it's now 10 nanometers. And when we actually get a little bit further looking at what is going on at Taiwan Semiconductor, it's even smaller than that. It's down to 7 nanometers. 35% of the chips that they produce are 7 nanometers. 15% of them, 18% of them are 16 nanometers. Now, when I talk about numbers like this, I know that it's this vocabulary that you might not be familiar with. So what I want to do is I want to kind of bring this into perspective and define for you how small this is. And in doing this, why am I doing this? This is not a science class. This is the emphasis of talking about the advantages that Taiwan Semiconductor has. And the fact is, the way that they utilize the nodes, the way that they construct the nodes, the advancement that they have has shrunk down to a very small size. And when we look at a nanometer, we're going to talk about the nanometers in relationship to silicon atoms. Now, a silicon atom in front of you on the screen, if those of you who are just listening to this, on the screen, I've got a depiction of a silicon atom. 14 protons, 14 electrons, 14 neutrons, very stable metalloid. But when we look at it and we go forward, we think about how big that a nanometer is. Remember, that's the pathways for the nodes in itself. The gaps between the nodes are now about 5 nanometers, and 1 nanometer is actually just the size, the thickness of 5 silicon atoms. That's how small it is. That's why it's going to take 10 more years for the Chinese competitors and the other competitors on a worldwide basis to catch up with Taiwan Semiconductor. Samsung is the closest to them. Now, we're going to go from small to big. We're going to talk about now the earnings of Taiwan Semiconductor. In the third quarter of this year, they had $12.14 billion in revenue. Now, if we look at it in perspective, it's up 29.2% year over year. Over the last quarter, it's up 16.9%. Now, when we translate that just a little bit more into the profit, it's down just a little bit. I wanted to say a hair, but that would be an HAIR rather than an HRE. It's just a very small difference in there. The net margins at 38.5%, which is really good, is only down 0.4% over the second quarter. Now, year over year, though, the net margins are up a total of 4%. Last but not least, in talking about the finances today, we want to look at actually what the earnings are. And over the third quarter earnings, the third quarter earnings were $5.30, and that's up over the second quarter by 13.6%. Now, look how much it is year over year. Year over year, it's up 35.9%. That's incredibly good. Now, when I talk to you about the risk, I've really portrayed Taiwan Semiconductor as the pinnacle of investments. It's really got risk in there too. And I think that you can identify the risk when you look at the graph that I've thrown up in front of you right now. And if for those of you who are just listening today, I have a graph that's going to show the earnings on a per share earnings on a quarterly basis from 2014. The dark blue line is going to be the actual earnings paid per share, and the dotted line is going to be the estimates per share. Now, you'll note that most quarters, except back during 2017, they were over top of, or they pretty close to met what the earnings expectations are. But about every year and a half to 2 years, there's a dip in earnings. And really, that goes along with the cyclical nature of the semiconductor business. There are some, if you go back to the idea of Moore's Law, it takes really about 2 years in development to enact a smaller semiconductor, a smaller chip of capacity and size. But the idea here is that the profits are going to roll with the production in itself. Now, they're on a roll upwards at this point in time. Could it be going back? I don't know. I think they're very far ahead of many of their competitors. So, in my opinion, it's going to continue, I believe, but that's not a guarantee going forward. Now, friends, this is a great part about a technology stock. This is the dividends. Now, for those of you who were just listening to that small music interlude, that was to introduce to you the fact that this technology stock has a dividend of 1.68%. And that's really pretty good. So if you're looking at it from the perspective of dividends, they've got good solid dividends too. Now, in the future, I'm going to be talking more about stocks that are dividend related when we have dividend portfolios. I know today we're talking about the hair portfolio stocks like Taiwan Semiconductor, but the idea is it pays a pretty good dividend from that standpoint too. But we have to remember that the past performance is not going to be a guarantee of the future results. Now, I'm going to reiterate that again in just a moment, because what we're going to do now is take a look at actually what's happened to the price. That's a really big deal. If you're investing, you want to look at what's happened to the price and ask yourself, can they continue? Can they sustain it? If we go back just a year to December the 16th of 2019, the stock was selling at $58.85 and a little bit more above that. Today, closing at 105.20 makes the fact that this stock is up 85.08% in the period of a year. Look, I have to stress it. You know it. The past performance is not going to be a guarantee of the future results. But let's go back and really, since this is a cyclical stock, let's go back and look at this from the standpoint of the last 3 years. Now, when I say cyclical, it's a little different than the consumer stocks from that standpoint. When I say cyclical, it's about their business cycle in itself related to Moore's Law. When we go back 3 years, we see that the stock was trading at $35.46 in 2017. And of course, today trading at $105.20. Wow, it's up 196.67%, which is an average APR, annual percentage rate, of 43.69%. We could only wish that it would duplicate that. Now, let's go and look at what the bulls and the bears, the analysts, are saying about this particular stock. Of course, one of the biggest things is an advantage. They have a higher gross margin than many of their competitors. Their gross margin's around 38%. So that's a big, big advantage. They have the most, without a doubt, most advanced technology. And if you just joined us, go back and look at the information on when we talk about the nanometer size and the fact that they are selling chips right now that are 7 nanometers compared to their competition. Okay. And then third, they fuel the fabless business model. Now, what is a fabless business model? A fabless business model is what's going on with Intel and with Apple. They're allowing an outside company to make their chips. Now, I know there's talk about Intel making their own chips and Apple making their own chips, but they've got a long ways to go before they catch up with the technology that's available through Taiwan Semiconductor. And when we look at the competitor's stock value in just a few moments, you're going to see exactly what I mean. Now, we have to look at the negative perspective too, because everything on stocks is not straight up. I know that Dave Portnoy says stocks go up, but yes, stocks go down too. When we look at what the bears say about this particular stock, there is competition with Taiwan Semiconductor. It's kind of like they can't rest on their laurels. They have to keep moving forward because competition will catch up with them if they sit still. They have plans for an Arizona plant, but in the analyst view, that's not going to be sufficient to supply all the semiconductor chips which are demanded through U.S. businesses. Now, the competitive threats, there's really 4 of them. In a moment, I'm going to show you 5 on the screen, but you'll understand the 5th one when I get to it. Really, Samsung is the closest company to a real competitor that's out there. There's Semiconductor Manufacturing International, or SMIC, which is a Chinese company. There's Global Foundries, which is actually a U.S. company per se. It's not really a U.S. company. It's a company that's in the U.S. that's owned by the Emirate of Abu Dhabi. And then there's United Microelectronics, which is in Taiwan. Now, you're going to see when we go and look at this next spaghetti graph, the blue, as you follow my dancing cursor, is going to be the last year of Taiwan Semiconductor, and it's been pretty regular. Now, when we look at the SMIC, this is the Chinese company, Semiconductor Manufacturing International. It has a huge gain, and then it has a huge drop-off. Why is that? Well, I personally think that a lot of it comes from the fact that in the United States, there is going to be a moratorium coming up in November on companies that are tied back to the Chinese military. Now, there are other things, because I know if you listened to me yesterday, you recognize the fact that the Chinese stocks traded in the United States only represent 2% of what the total value is of the Chinese market. So from a value standpoint, a logic standpoint, it doesn't make a big difference, but sometimes logic doesn't portray it. The stock market's not logical all the time, friends. It's just kind of the way it works. It trades on the anticipation of what may be happening. Plus, also, there is the fact in there that SMIC is behind Taiwan Semiconductor and Samsung in their advancements. Of course, now when we look at this and we talk about the performance, I always have to keep harping to you, and I'm sorry if it sounds like a broken record, but the past performance is not going to guarantee what the future results are. All right, what's the fair market value of this stock? Let's look at it in more detail. Morningstar says the fair market value was at $95 per share. Today at 105.20, that means it's trading at a premium of about 10.74%. Now, this is a really interesting slide, the very next one. If you're just watching in front of you right now, you've got a slide that's showing you the number of analysts that are issuing opinions on this company. And out of 5 of them, 4 of them are saying, hey, it's a strong buy. But you got this one straggler out there that's saying sell. It doesn't make sense to me when you look at the values in itself. There's a couple of other things that really don't make a lot of sense, but we're going to look at the options in just a moment and see what the actual investors are doing rather than just looking at what the analysts are doing. Because when we look at the list of different analysts, the list of analysts is kind of crazy, because at 105.20, we've got companies out there like Susquehanna Bank Shares and Goldman Sachs that are saying that their target prices are $40 and $55 respectively. Susquehanna Bank Shares is the one that put the sell on this particular stock, and their target price was $40. But then you go on the other side and look at a September opinion that was from Goldman Sachs, and they reiterated their rating as a buy, and they had their target price at $55. So, it's kind of confusing from that standpoint. So let's take a look a little bit more, though, at the at what's going on with the different bank shares in itself. Hold on a second. I'm going to change this around because those little thingies that you see in front of you right now are just really irritating. So, okay, I'm going to do this from this standpoint. Pardon me, friends, as I go on here. All right. Hopefully you can go past the spinning circles. Actually, let me do it this way. Let's just take those crazy things out so that um, you don't get distracted because it is kind of crazy. All right. Hold on a second, friends. If you're just listening, hold on and sing the Star Spangled Banner for me or something like that. Okay. Or your country's national anthem. All right. We're done. Let me put this back up on the screen so that we know what we're talking about from this standpoint. All right. What you're seeing in front of you are calls and puts. All right. This is for December the 24th. Remember, a call is an option to buy, it's a contract. And that contract basically says that for a price, I can have the option of buying a particular stock. A put's on the other side. A put is to sell. A put is a contract to sell. Now, if you follow the dancing cursor, you can actually see that for December the 24th, that there are 589 open contracts for $105. And today, hey, it's trading at $105.20. So I think the consensus of the market is saying that it's pretty fairly priced as far as the stock goes. Now, the interesting thing that I see on this is that the breadth. In other words, there's not a real wide number that goes in between what the strike prices are on the calls for the high and the low. There's $101 is going to be one on the bottom, and there's 196 contracts for that. When we go up $110, that's not that much off of where we are right now at 105.20. There's 578 contracts. So if we go, let me go to the next slide because that kind of explains just a little bit about this. What this does is it shows you that the 52-week high, it goes from 107.84 down to a low of 47.20. So when I say that there are 578 contracts for a call option at $110, these are people that basically have a call to own this stock at 110. And it's probably right now, since it really hasn't gotten there, it's not exercisable from that viewpoint. Now let's go forward though and take a look at this a year from now. When we look at it, this is actually January 2021, and we're going to look at the number of puts and calls that are out there. As far as the calls goes, there's a lot more people that are wanting to buy this stock than there are that are wanting to sell it. If you look on the left of the screen, you're seeing the call options, and you've got at $104, you've got 536 contracts that are out there for January the 8th of 2021. That's over a year from now. All right, when we go and we look on the puts, now remember the puts is a contract to sell. There's not very many of them. So people are more optimistic on buying this stock than being pessimistic on selling it from that standpoint. All right, I hope that helps you out some, friends. And remember, we're always looking at the stability, the earnings, and the competitiveness. And if you question where those are, go back and look at the slides that I went through earlier, and you can recognize the concepts of what makes this a stable stock and what some of the possibilities are that could affect the value on the downside. And as far as the earnings go, just remember that the nature of the semiconductor business is cyclical. We run about a 2-year cycle on production of new chips. And the idea is that Taiwan Semiconductor is really about 10 years ahead of most of its competitors, except for Samsung. Samsung's a different story. All right. Thanks a lot for visiting with me today and learning everything that you learned, hopefully something, and come back tomorrow and we'll learn a little bit more. I know I'm appreciative of all of your comments and your requests for stocks. And I hear you when you say that you want to learn more about European stocks. I did get some requests from that. And I have some requests for some different leisure wear stocks. So we might take a look at Adidas and Nike and some of those other different companies and go off the trail of semiconductor companies and technology just for a little bit, because there's a lot of diversification out there of stocks that you can invest in. So stay tuned for the disclosure, and I will see you all tomorrow.